Okay, so something that absolutely must be discussed in today's video is the recent announcement that was made all over the news, all over social media regarding interest rates, credit scores, fees, one person getting this, one person getting that. Unfortunately, there's been a lot of misinformation out there and a lot of information that's a little bit misleading, but you know me, you've been following me long enough to understand that I am here to debunk any myths, separate fact from fiction, and just give it to you the way it is and give you even an example of a specific loan scenario that you could see for yourself. But before I do that, I want to go down a quick trip down memory lane, because before 2008, the difference in interest rate between someone with a, let's say, 800 credit score and a 650 credit score wasn't that big. The margin and the gap between the interest rate between those two individuals wasn't as large as you might expect. And then, of course, when 08 happened and the mortgage crisis happened, housing market crash, banks started failing. When all that happened, and then the government, mortgage companies, and all the parties that were doing their due diligence on what happened, when they started investigating and looking at the performance of the different mortgage-backed securities and bonds, they noticed, to no one's surprise now when you look back at it, but they noticed that the lower credit score portfolios were defaulting at a higher rate than the higher credit score portfolios. So that's when the credit or the interest rate matrix that mortgage companies use today by Fannie and Freddie Mac was created. And it was based on different credit score tiers, different down payments. So if you had a credit score between 700 and 720 with a certain down payment, you would get this sort of fee, or you would pay this much for an interest rate. If you had a 721 to 740, it would be this. And, and also if your credit score was lower, your risk factor was higher. So that's the matrix that all these announcements are referring to, and what mortgage companies use today to determine your interest rate. But don't forget that your interest rate is based on a lot of factors. Your credit score and down payment is two of the factors in it, but there's also your debt to income ratio. There's your how much credit you have on your credit report, what kind of credit you have. Is it a primary residence? Is it an investment home? Is it a vacation home? Those are just some of the few factors that go into your interest rate. So just so you know that this announcement that was made isn't new to the mortgage companies, because Fannie Mae and Freddie Mac, or really FHFA, Federal Housing Finance Agency, that runs Fannie Mae and Freddie Mac, they made this announcement to mortgage companies back in January that would go into effect on May 1st. And so if you've recently had a mortgage, or if you've recently been quoted an interest rate on conventional loans, remember, this is only for conventional loans right now. This does not apply to FHA, VA, jumbo loans, any other non-QM loans. This is specifically for just conventional loans. So if you've been quoted an interest rate recently, all this is already been baked in. All these fees and changes have already been baked into your rate. And if you've closed on a loan, it's already been baked into your mortgage, more than likely into your interest rate. So that's the first thing. It's not new. It's new now that kind of like it's been all over the media and all over social media, and it's been getting a lot of traction. But in reality, this has been going on since January. And mortgage companies have baked these additional fees or changes into their rates. Secondly, is that it's not the interest rate that is changing or being affected. Interest rates, like I mentioned, are based on a lot of different factors, like I just mentioned. One of them, too, is what's happening in the bond market. So if the bond market is performing a certain way, that is also another factor that goes into your interest rate. But the interest rate is not what is being affected by these changes. It's the fees, it's the cost for you to get a certain interest rate that is changing. So I have an example for you for two individuals, one with a 740 credit score and one with a 640 credit score. So someone with a 740 credit score putting 5% down. Let's say we have two different people putting an offer on the exact same house. 5% down, 740 credit score. Before, you were paying 0.25% in fees to get whatever interest rate you're getting. If it's 6%, 7%, 6.5%, whatever interest rate you were getting, because you have a 740 credit score and you are putting 5% down, you're paying 0.25% in fees to get that rate, whatever rate that is. So that comes out to $750 for you to get that rate, whatever it is. Now that person with a 740 credit score putting 5% down is paying 0.625% or $1,875. So that person, as you've already seen from the news, yes, they are paying more in fees to get the same rate that they would have gotten 6-7 months ago. Now let's take a 640 credit score person. So same house, different person. Now this person has a 640 credit score and they're putting 5% down. Before the changes, they would have paid 2.75% in fees for whatever rate they're getting. Now, because of the changes, their fee has dropped to 1.875. So before, they would have paid on a $300,000 loan, they would have paid $8,250. Now, because of the changes, they would be paying $5,625. So that is a real life example of what these changes mean and how it affects a real life scenario, because the media is making it sound like higher credit score people are getting screwed over and lower credit score people are kind of sticking it to the higher credit score people. And while they are paying less and the higher credit score people are now paying a little bit more, the lower credit score is still going to be paying more in fees and their interest rate is definitely going to be a lot higher. So those are the facts. I'm not here to say what's right, what's wrong, and any of that stuff. But I just want you to know exactly what the facts mean and what the changes mean as you are possibly looking at buying a house, or if you know someone that's looking for a house and you need a little bit of clarity based on a lot of the information that's being out there. So there you have it. I hope that brings some value to you. I hope that helps you understand it a little bit better. If it does not, you know you can always reach out to me and I'm here to help you out. I'm here to answer any questions you have. I do all the shopping for you so that if you are looking to buy a home, looking to refinance, looking to buy an investment property, whatever the case may be, I do all the shopping for you so that you get the best rate on your mortgage. I hope you have a great rest of your week, and I'll talk to you soon.